Breaking this morning, Canada's inflation rate fell even more than expected in August. Statistics Canada says inflation dropped to 7% after hitting a 40-year high earlier in the summer. Scott Peterson has all the numbers. He's following that for us. So, arguably some good news, but food prices, though, continue to rise in this country.
Yeah, it's really a good news, bad news type of story. The good news is the headline rate is falling to 7%. This is going to take, hopefully, some pressure off the Bank of Canada to keep rising interest rates, but the food inflation, and this is unavoidable for all Canadians and everyone around the world for that matter, and it's really a troubling sign around the world as far as food inflation. We're seeing it in the UK, we're seeing it in the US and China, and a lot of it because of the disruption of grain from Ukraine and Russia. But let's take a look at these numbers from Statistics Canada because the headline down to 7%. That's down from 8.1%, the record 40-year high that we saw back in June. But gasoline continuing to come down as well, still up 22% over this time last year, but down from a 35% hike just a month ago. Food prices up close to 11%, 10.8% to be precise for the month of August, and that's the fastest grocery inflation rate year over year, going back all the way to 1981, and that's important. That's when we had double-digit inflation back then. But 3/4 of Canadians, as a result, are changing their food habits. That's out to a new Dalhousie University study just this morning. But goods and services prices, they slowed. We saw durable goods up about 11%. Gasoline prices helping that. Durable goods, these are the bigger items like washing machines, automobiles, up 6%. And to put this all in context, our average hourly wage up 5.4%. So anything above that 5.4% is in effect directly money out of our wallets. And in this instance, food inflation, 10.8%, is the real wallop that many Canadians are experiencing as we all go to the grocery store shopping.